And it's time for business news. Nona Peltier joins us in the studio. Hi, Nona. Now, I'm interested in this, new town that's planned at Drury, and it seems that more bits of the puzzle are falling into place. This is Kiwi Properties project, is it? So what's happening?
Yeah, so in 2017, Kiwi Property, which is a very large company, they own Sylvia Park and other big complexes, they purchased quite a large block of, 3 parcels of land in the town of Drury. And so they have about 51 hectares, which is a large 3 pieces of that. One piece that they have an option on, but they paid $40 million initially. And the idea is that they were going to develop it over 20 years. Now, really, the thing is there is a town in Drury, but they want to build a new town a center town next to it, which are going to have a rail line and transportation hub and all sorts of shops and so forth, as well as a big residential development. So that's a multi-billion-dollar aspiration. And today, the government announced that they're going to invest $2.5 billion towards infrastructure, which will include a rail and transportation hub at Drury, which is going to connect in with all of that from South Auckland all through into the city. So big plans in store for that part of the country. I'm sure it's going to be somewhat controversial, though, because it incorporates a lot of really lush agricultural land, which some people are very concerned about being built into urbanized.
And there's been a lot of conflict and competition for that land between the need for housing and growing vegetables, basically.
Exactly it. So I suppose if there's going to be a period of consultation once the plan is now finalized, and probably by the end of this year, and then there's going to be like a notification. Auckland Council are going to talk to communities and so on. They'll be able to provide their input into it. What Kiwi Property would like to do is break ground and start developing in about 2 years. It will be about 10 years before a community is finally established there in the new parts of the town.
Okay. Now, we've been watching the markets, you have, day in and day out. Another bit of a, upsy-downsy, was it today?
Well, we're more like a wild ride, I'd say. Sorry. Excuse me.
Coughing into your elbow for anyone who's not watching.
I was watching.
She's doing coronavirus protocols.
Yes, indeed. So what we had was... So we're just about...
I think we need someone to bring Nona a glass of water.
I think I need a bit of water, if
possible.
Yes. So what happened overnight was the markets in the U.S. really went down quite a lot. Partly because of...
Hang on a minute. No, shall we wait for your water to come? And I'll take this opportunity right now to tell you, after we finish with Nona, if you haven't had your fill of business, what you can do is go to the podcast, which is 2 cents worth. And this week it's Peter Griffin, who, he makes an attempt to sell his drone and finds out about the battle brewing between Trade Me and Facebook Marketplace. And that's available all the usual places where you get your podcasts. And while I've been giving them a little bit of a plug, Nona is back, having had a drink, just like magic.
I went and ran out the door and got some water, and I feel much better now. Thank you very much. So the International Air Travel Association came out overnight and said that basically the cost to the aviation industry, this is the coronavirus, the cost of the disruption, is about $113 billion US dollars. Now, that's about half of the value of New Zealand's whole economic the size of our economy.
That is really
massive.
Puts it in perspective. Yep.
So that sent the market into a tailspin of not surprising. No aviation pun intended there. But really plunged. So shocking day on the markets. In fact, it was the worst that we've seen this past week since 2008. Has really lost a lot of value in the U.S. market. There's a lot of concern in Europe and in North America about the spread of the virus. It seems to be spreading just now into the communities. Companies are worried about their, staffing levels, how to manage through all of that. It's a big problem, and it's certainly been reflected in the stock. We didn't do too badly, though. And I think that's partly because we're somewhat insulated from that at the moment. We're not seeing the same spread of the virus as some, that we're seeing in Europe and the United States.
And even in Australia.
And in Australia, too. So we're somewhat sheltered from that at the moment. That could change. And so we didn't do too badly. At the end of the day, we fell 1.8%, but we were down more than about 2.5% at the open, which was, pretty substantial. So that's a bit better than what we've seen in Australia as well. well. Overall, the markets in Asia really reflect what we've seen in the United States, and the futures look just as weak. So you can expect a lot more volatility as we get through the day. So let's see. What other things can I tell you? Yeah, and U.S. Crude oil prices also dropped about 1/3%. And there's some real concern there. The OPEC nations have got together and said they were going to restrict the flow so as to keep the prices from bottoming out. No one wants to see that again. Well, some people might want to see it, but certainly the industries don't want to see it. But then there's the non-OPEC countries. There's some question about whether or not they're going to honor that. So that puts some volatility into the oil sector. So pretty much every part of the market is volatile at the moment. And it's anybody's guess where we're going to end up tomorrow, the next day. Certainly overnight, we can expect to see the U.S. markets take another hit. Certainly the futures are pointing to that.
Okay, so our numbers at the end of the day?
All right, so we finished down 1.8%. And again, that sounds like a big number, but it could have been much worse. That's 215 points down to 11,426. The dollar is trading at 63.1 U.S. cents, 95.6 Australian, and 48.7 British pence. The currency is holding steady because the U.S. dollar has been taking quite a hit. And that's partly because the market is pricing in another rate cut by the U.S. Federal Reserve. The one that they did earlier this week in a surprise move really had hardly any impact whatsoever. It was sort of like, oh, that's good. And then, no, we don't think so.
Yep.
So as long as the coronavirus continues to spread, I think we can probably expect to see this kind of volatility on a daily basis.
Thanks, Nona. That's Nona Pelletier with our business news.